If you are confused about what time frame to trade, you're not alone. I think this is something every trader has struggled with at some point. Should you be scalping, swing trading, 1-minute charts, 4-hour setups? Most beginners, they pick the wrong time frame and it ruins their trading right from the start. They either overtrade, they burn out, or they waste months chasing setups that don't fit their life. And the truth about timeframes is that the time frame that you choose to trade on affects everything. It affects your stress levels, your learning speed, whether you burn out or you stay consistent. So in this video, I'll break down exactly how to choose the right time frame based on your psychology, your lifestyle, and your goals. So let's break it down, starting with low time frames, also known as scalping. The biggest benefit of trading lower time frame to me is obvious. It's that you get more reps. You can take 3, 5, maybe 10 trades in a single session, depending on what's going on in the market. And that means faster feedback on your system or on your strategy. It means faster learning and therefore more data to work with as you're building out your strategy. You'll see setups more often. You'll get to experiment more. You'll improve your execution faster because you're putting in more hours on the charts. And then there's also the big benefit of clean boundaries. You can treat trading like a shift when you trade the lower time frames, right? You can sit down for 2, 3, maybe 4 hours, trade your plan, and then walk away flat with no positions open, no overnight stress. The style works great for people with a structured daily routine or for those who want to treat trading like a job. But scalping is not as easy as it sounds, and it's not as easy as your favorite YouTuber wants you to believe. Let's talk about the downsides as well. The first thing that comes to mind is noise. The lower the time frame you trade, the more randomness you're going to be exposed to. Every liquidation spike, every fat-fingered market order, all of that shows up in the 1-minute and the 5-minute charts. For markets that are less liquid, that could be crypto altcoins, price action becomes a lot harder to read. Trends fail faster, setups get invalidated more often. Your stock can get hit by a wick that means absolutely nothing in the grand scheme of things. So even though you get more trades, each trade is going to be more fragile. Your strategy has to be tuned for these conditions. A lot of the popular trading techniques like EMAs and supply and demand or classic price action, they don't always translate well to low time frames. It depends on the market, like especially in crypto, I think this is true. You can quickly get chopped to pieces if you try to trade every single signal you get. So those strategies, they rely on structure, and low time frames are not always structured. More often than not, they are chaotic. So if you're going to scalp, you need tools that are built for it. Systems that are fast and reactive and designed to thrive in noise and not fight it. For me, that's volume, it's order flow, it's looking for absorption, it's looking for mean reversion setups, it's momentum continuation or lack of momentum. These are my go-to tools when I scalp, but I can talk much more about my setups and strategies in future videos. And finally, scalping takes more mental stamina than the higher time frames, I would say, because every single second matters and your execution speed matters. So you're either fully focused or you miss the move. And that might sound fun at first, and it can be, but doing it every day can also for some people be extremely mentally draining, especially if you're also trying to backtest or refine your strategy at the same time. So now let's zoom out and talk about swing trading, right? When you're trading on higher time frames. This is where you're trading the 4-hour chart, the daily chart, maybe even the weekly chart. Here your setups are going to take longer to form. Trades take longer to play out. The big benefit is clarity. You get cleaner price action. You get real structure, you get real trend development, you're less exposed to micro spikes and liquidations and random noise like we talked about before. If you're trading something like EMAs or liquidity sweeps, supply and demand, whatever, those tools shine on the 4-hour and the daily charts, in my opinion. And emotionally, it's also just a different pace. You don't need to be glued to your screen. You can place your trade, set your stop and your target, and just let it breathe. And that means that technically, you have more freedom, more time to work, to live, think, or even trade other systems on different time frames. But trading the higher time frames comes with a new set of challenges, and that's why I said you technically have more freedom, right? People always want to make higher time frame trading sound like it's the easy way of trading, but the way I see it, you've got 2 big challenges. One is waiting. You might only get 1 or 2 setups a week. Sometimes you'll go multiple days without a valid entry. It can feel slow, it can feel boring. And when you're still learning, if you're a beginner, that means less feedback for you. If you're trading low time frames and you get maybe 3 clean setups every day, that's 15 trades a week, which is way more than 500 in a year, right? So that's a lot of experience and a lot of feedback when you're trying to learn. And that's experience and feedback that you won't get the same way if you only get one trade a week. And the second challenge, while holding trades overnight sounds peaceful, it really often isn't for most people, even though trading is all about, not feeling anything and not being emotional. In the end, we're human. Even with perfect risk management, you will most likely be thinking about that trade that you're sitting in. You'll still wake up in the middle of the night, check your phone. You'll still feel that tension in the back of your mind while you're at dinner with your friends or with your girlfriend or with your partner, whatever. That's just part of it, right? So again, it's all a trade-off. Scalping gives you fast reps, fast results, higher noise, high pressure. And swing trading or higher time frame trading gives you slow reps, slow growth, but more structure and less randomness. So what should you actually do? And here's what I recommend, especially if you're still learning. First of all, it's going to depend on the market you trade. My primary market is crypto, and for that I would start with like a medium time frame, something like the 15-minute or the 1-hour chart, because you'll get enough reps with those time frames to learn and build confidence, but you'll also avoid the worst of the noise from the 1-minute chaos, right? You'll start seeing price behave in a more readable, structured way. This is the sweet spot for most people, I believe. It gives you time to think, it rewards proper planning. You can use every tool in the book. You can use tools like EMAs, price action, without getting punished for every tiny candle. And while trading the medium timeframes, you can still experiment with higher or lower timeframes once your system is built and is in place. So a solid 1-hour system can scale up to the 4-hour or scale down to the 5-minute, depending on the conditions. In the end, a setup that works on a 5-minute chart is also going to work on a 4-hour chart. Timeframes are fractal, so it doesn't really matter. It's more about lifestyle. But the foundational structure is easier to build in the middle, I think. Eventually, I think 1-minute charts is the way to go, but not until you are ready and able to filter out all of the noise that comes with it. But the part that most people overlook is that your time frame of choice is going to affect your entire lifestyle. So picking a time frame isn't just a trading decision, it's literally a life decision. If you can't dedicate a couple of hours to the market when it's the most volatile, then you probably shouldn't be scalping. And on the flip side, if you have 2 hours of free time every morning and you love fast-paced work, then scalping might be perfect. So don't just pick your time frame based on what sounds cool or what your favorite YouTube trader recommends. Pick it based on your availability, your attention span, your stress tolerance, your lifestyle, and your preferred type of system. And here's a big one. Pick it based on what makes you actually want to show up every day. Okay, this one is really important. Some people want 2 trades a day. Some people want 2 trades a week. And there's no right or wrong here, right? It's all just trade-offs. And let me also say this, no matter what time frame you pick, there's nothing wrong with taking it slow, right? You should be taking it slow, even if you're trading fast time frames, okay? You don't need to rush. You should never force trades just to feel productive. Just because you're on the low time frame, it doesn't mean that you should just open trades willy-nilly, right? Always wait for the setup, always wait for the triggers. And if you're trading a 4-hour system and it only gives you 1 setup every 3 days, that's fine as well. That's part of the game. Don't force trades that are not there. Even though getting in reps is really important, quality always beats quantity. So to sum this all up, there's no best time frame for everyone. There's the best time frame for you based on your goals, on your personality, and on your system. And if you're starting from scratch, I highly recommend beginning with the 15-minute to the 1-hour chart. You'll see enough setups to grow. You'll avoid most of the noise, and you'll be able to use real price action tools. And from there, you can evolve. You can branch into faster or slower styles based on what you discover about yourself as a trader. And I'll be posting all of my strategies and systems for different timeframes very soon, so make sure to keep an eye out. Thanks for watching, and I'll see you in the next one.